Yeah, so Chris, I just made you the presenter. We're all looking forward to hearing you, seeing you. You have some fans here in F.A.C.E. So I pass the ball to you, buddy. Getting ready for you to take a three-point shot from outside the arc. Are you there? Are you there, Chris?
Yeah, I'm here. How's it going, guys?
Oh, hi, Chris. Hi, Chris. How are you? It's been a long time. Help me. I remember everyone's trades. You and I have done this before, haven't we?
No. It's our first time. First time.
Okay. I interviewed so many people when I ran LAR on FX Street. I thought you may have been one of them. So I'm very happy I reached out to you. And didn't you have another handle before Forex with Chris? Didn't you have FX World Boss?
yeah, that was my original Twitter handle. Yeah.
So did the president take that away from you because you had World Boss in there?
Yeah. Yeah, Donald Trump had a problem with that, so I had to switch it up.
All right. So since it's the first time, Chris, and I do want to get your views on some markets, but I also find it real interesting because there's always people just starting, and someone who's gone through the process, who's had the journey of the long and winding road of trading. It's always interesting for us to know what your beginnings were like, how you ended up being a trader. Did you have mentors, or who influenced you? And can you tell us a little bit about what your struggles were like early on, and who's responsible for getting you into this business?
Oh, okay. Yeah, I started in 2008, 2009, and if you remember, that was the mortgage meltdown, and right. Stocks were going crazy. Stocks that were $20 or $50 were trading at $4. So I said, why not buy these stocks? Because I know the market cycles. Even at that age, I read a bunch of books that the stock market is the best place to put your money, and over time, it just it continues to rise. So a $4 stock at the time, it just made sense to buy it.
As long as it wasn't Fannie Mae.
And I actually made the mistake of buying Fannie Mae.
Okay, interesting. Okay. All right.
But I made some right moves, and I got lucky, I suppose. But after 2009, the sale was over. It was hard to get a stock for $4 anymore. So I started looking into other ways, and I found my way into Forex, and it was very different from stocks, because you're dealing with leverage, you're dealing with a lot of different scenarios, economic news, stuff like that. It was very difficult in the beginning, because you're working off of information that's kind of public, YouTube videos, people on you're working off. Yeah, I'm still here. You're working off YouTube videos, and you're not really getting a full.
So you had to learn how to separate the wheat from the chaff on the internet when you first started. So you're pretty much self-taught then.
I'm self-taught, 100%. 100%.
Okay.
Yes.
Did you have any influences? I see you use sticks. Maybe Steve Neeson was an influence. How did you decide to go with candlesticks? I mean, for years I just used bar charts, but curious how you ended up choosing sticks. And I see by looking at your charts, you trade naked, no indicators.
Right.
So I hope you keep your shades drawn, and you know what I mean, if you're trading naked. So why don't you tell us about who influenced your methods, and You have euro yen up here. Obviously, we have that dramatic move from April to the recent high. What are you seeing here, Chris?
Okay. With the euro yen, obviously you have to take a look at what the euro is doing and what the yen is doing to kind of figure out what's going to happen next. But basically, if you look at the yen has been like on an uptrend for a while now. It hasn't really broken this what is it, May swing high, and what's that, March swing high.
I think we did take out the May high. They took the stops over the May high out. Didn't they? Yeah. See how? Yeah. So therefore, that to me looked like a stop hunt. But but okay. So you're looking at both an uptrend in euro that's still, somewhat uninterrupted, and in the yen that was uninterrupted until this week. So and I'm assuming you have a long-term bullish bias.
On the euro yen, sort of. Let me explain what I think is happening. My trades are not too long, so I don't hold them for months at a time. I look, my time frame is about 2 to 3 weeks on average.
Swing. You're a swing trader.
Basically.
Okay.
So I'm expecting some yen strength to come into the market. So I'm expecting euro yen to either test that 130 one more time.
Okay.
And drop back down to 128. But I want to see how it reacts to 130 first. It's a nice psychological level. I like it lower before it hits these demand levels down here, before it starts to head back up.
Okay, so supply demand looking left is part of your style. Yeah. Were you an OTA student? Pretty expensive. Sam Simon, you watched him on FX Street, I bet.
Absolutely.
Okay.
To answer your question, Sam definitely influenced me in the beginning. So yeah, I watched a couple of his videos, and it made sense. And I just over the years just worked on it on my own and came up with a formula that works for me.
Okay, great.
Mm-hmm.
You ever follow that Forex stop hunter Dale Pinkert guy? All he ever talks about is RSI and 3 drives and stuff like that.
I pay attention to what you're doing, Dale. I like what I'm doing, and it works. Your 3 drives make sense. I see it occur in the market all the time, like like right here, 1, 2, and then a 3rd drive, impulsive move.
Yeah.
So it does happen.
Yeah, it's not. I'm not the creator. It's not an original thought. I learned it from a guy named J.R. Hill in the 70s. So yeah. So what's original work in the market? Solomon said there's nothing new under the sun. So you just I think it's great what you just said. It's a pearl. In fact, Jack Schwager would congratulate you on finding a trading style that suits your personality.
Absolutely. So yeah, I want to talk about the Euro Aussie and Aussie Kiwi. Is that fine?
Oh yeah, sure. Yeah. Okay. The community has an interest in those pairs. Okay.
All right. So if you guys, I don't know how many people are in the room, but if you guys have been following Euro for the last 2 or 3 months, we've had a strong up move, and it left a couple it left gaps open in the market, and I'm a big believer that gaps eventually must be closed. It just,
Why?
Say it again, Dale.
Why?
Just
and eventually it could be a real long time sometimes, can't it?
It can, just like this one right here. But
yeah.
Let's where was it?
I mean, I agree, but I've seen gaps go unfilled for, you know, month upon month upon month upon month. If it's a true breakaway gap and you know, the beginning or the onset of a move, sometimes it, you know, you could go broke trying to trade the gap being filled. That's all I'm saying.
No,
I agree with you. I think it will in Euro Aussie, but I just want to make it clear that sometimes is a little bit of an overstatement. That gaps, you know, eventually get filled, because eventually could be when your account is empty before it happens. Right, buddy? Okay.
Right. So, yeah, I agree. But I still pay attention to gap opens and the momentum that's happening as we head closer and closer to the gap. So if you pay attention to Euro Caddy for instance, this gap right here just about closed 2 days ago or yesterday.
Right.
If you look at Euro.
So is this does the gap fill set up a, you know, pretty good break? That was a 3-driver up there. Does the closing of the gap, is it one of your contingencies for perhaps wanting to be long EuroCAD in here?
Yes. I'm looking for sideways movement. I want the dust to settle a little bit before, you know, because usually markets before they bottom, they move sideways, and then once they move sideways, they start an uptrend. So basically, I'm just waiting for this to kind of bottom out and the selling pressure to kind of ease off, and then start to break these 148 supply levels, 149s, and look for a buying opportunity back down and drive it back up. But what I was trying to say was that if you look at EuroCAD, it's closed its gap. If you look at Euro Kiwi, it closed its gap as well. The only pair that hasn't closed its gap is the Euro Aussie. So I'm looking at that these days, and I'm building a bias that eventually in the next two or 3 weeks we might see some Aussie strength to close that gap, because all the other commodity pairs have closed except for the Euro Aussie.
That's insightful, buddy. You know how patterns, sometimes you'll see, you know, the same patterns emerging in different instruments, and basically you're saying that all these other pairs filling the gap is a precursor for Euro Aussie doing the same.
Yeah, absolutely. It just it makes a.
I think you're going to be right.
Hopefully so. You know.
Just another trade, right, Chris?
Yeah.
You know, let me ask you this.
Mm-hmm.
How do you, and I think this is a problem for traders, and I know you teach, I'm going to get to, you know, what your business model is besides your trading. I went to your blog site. Mm-hmm. How do you psychologically make each trade just another trade and not too important? You know, I find that when people, the outcome of an individual trade is too important to them, mm-hmm. It usually doesn't work, and it's usually because they're underfunded or over leveraged. Do you agree? And how do you just say, well, you know, like if a trade doesn't work out, next, and not dwell upon it and get into a fetal position, but just like a good NFL quarterback throws an interception, he's ready for the next play, or he gets sacked and he's ready for the next play. What psychological lessons have you learned? Because I could tell you have a good feel for directional moves in the market.
Mm-hmm.
Did you have to overcome anything psychologically to become a proficient, effective trader?
Yes. Yeah, definitely. How I look at trading is I try to just not. I've learned try not to be emotional about it. You have to come up with a strategy, a system. You have to look at your setups and gauge the probability of those setups. And once you realize that this has a high probability of working, you enter the trade. So if it doesn't work, you've done everything, you've done your homework, you've done everything possible that you could do to line it up as best as possible. And if it doesn't work, it doesn't work. You just move on to the next one. And over time, you just build up enough confidence to say, okay, I'm doing everything right, and this over time, it will get, if I continue to follow my rules, and I continue to follow the rules and do the setup the right way, it'll lead me in the right direction. So
how many years did it take for you to come to that mindset? I ask everyone that question because a lot of people come into the business and think they're going to be a star in their first year. And I think just like any other profession, it takes a period of years, just like getting a bachelor's degree or an apprentice carpenter, becoming a journeyman, and then a master. How many years before you started to be an effective, profitable trader, would you say, in FX?
Yeah, I would say it took about 4 or 5 years.
Okay, interesting. Okay,
Yeah.
so that's why I'm sure you run into it. And do people ask you this question too, Chris? Can I trade for a living with 10K? And what do you say to them? Because I say yes if you want to live beneath an underpass.
Well, my thoughts on that. I think to start, you need to start with a decent account size. I think as you gain experience, and you make less mistakes, you can get by with 10K. But over time, you still need to build your account to be a little bit more serious with it. I don't want people to approach trading and say, okay, I need to take out a mortgage on my house. To get started, because if you get started with a large account size, you're gonna blow it away if you don't have the right amount of experience. But I think between 10 and 20K, would be all right to start. But as you gain experience, it'll grow, and you'll just get better at it.
Okay. Was there another instrument you wanted to go over? Did you say WTI or I'm not sure, USD CAD or Aussie? Aussie Kiwi. Yes. Okay.
Yeah. Aussie Kiwi. All right. So yeah, let's talk about this one. If you look at the weekly trend, we're kind of in the pit of a demand area down here, and it's bounced off really nicely off those 104s. I thought we could test down to the 103s, maybe do a stop run, and whoever has their stop down here would get stopped out, but that didn't happen. So it looks, with my thesis, if you combine the Euro Aussie and just Aussie strength working with that theme, it looks as if the Aussie Kiwi might be heading up as well. That 105.6 area, let me back in for a second here. This 105.6 area, we've tested it like so many times, and we finally had that blue candle to break above it. So I think these buyers down here have enough pressure against the sellers, whoever was there. I think the buying pressure is strong enough to break the supply area here. So I'm kind of expecting it to kind of rocket up to the upside over the next couple weeks. And especially when you look at this candle right here, the day isn't over yet, but the fact that this wick was able to break back above 105, it's kind of an indication that, you know, buyers are willing to defend the 105 area. Like I said, the day isn't over yet, but from what it looks like so far, it looks like Aussie Kiwi is a buy. I like it to 107 and a half to test 107 and a half right up in here, and we might pull back a little bit. Long term, I think this is a trade I'll hold on to for the rest of the year. I fully expect it to break and test this 110 again eventually.
I mean, there's actually a long-term count off the weeklies once you break out through there that could take it to the 120 handle. But you know, I don't know if it's going to bother you or not, but I agree with every instrument that you showed today and your forecast, so you may want to lighten up. So why don't we get to perhaps you want to show your blog, Chris, and what you do, and, you know, your business model, and for how people could get a hold of you if they're interested. You want to do that now?
Yeah, sure. Yeah, so you guys can reach me at trade FX with Chris. That's the website. That's the blog. You know, in case you guys don't know what I look like, that's a picture of me. Basically, I try to give lessons or tips on stuff that I've learned early in my trading. You know, about trends. By the way, I don't really believe in trends too much, especially on the shorter time frames. I think when you get on the larger time frames, the market starts to trend. But on a smaller time frame, you know, the trades price basically bounces in between levels. But anyway, yeah. So this is Trade FX with Chris. I write articles about lessons that I've learned early in trading. You guys can check me out there. I'm always available on Twitter. You guys can follow me on Twitter. I really want to hear from you guys. You know, trading is a lonely endeavor. you know,
you can hang out. You're welcome to hang out with us here in F.A.C.E anytime, Chris. And I encourage people to follow Chris. There you go. Here's his handle. And I want to thank you very much, Chris, for coming here and sharing some views and sharing your story with us. And I'm glad that I reached out to you and that you decided to share your time with us today. It was an interesting interview, and I wish you nothing but the best, and may pips rain down on you and all of your ideas. You know, may Aussie Kiwi go to 120 while you're long from 105. And very nice to meet you, Chris, and you're now one of my Trading Warrior brothers.
Thank you, Dale. Thank you. I appreciate it. Right.
So thank you very much, everyone. That's been Chris Kerr at Forex with Chris. Twitter handle is the same as his website. Thank you, everyone. Thank you, Blake, today for your analysis. Good luck. And Steve and Stelios and the community for your great questions. And We'll wrap up the week tomorrow. Most of all, don't just count your pips, count your blessings, and sell the guppy looking for another wave to the downside with stops over the high. So this is Dale Pinkert. Those are my calls. The next one's yours. Have a great day, everybody. Enjoy your summer. Thank you again, Chris Kerr.
All right. Thank you, Dale. I appreciate it. All right. Yep.
All right, buddy. Okay, guys. Enjoy your summer day. See you tomorrow for TGIF.